Since few days on YouTube, on the internet, on Reddit and so on, I see so many people talking about advanced micro device AMD as a huge opportunity for the future, the probably next NVIDIA, and a stock which is very, very undervalued because since the all-time high in January 2024, the price decreased by almost 40%. Something like this, yeah, 42%, 41% in very short period of time. So we're going to discuss if it's a real opportunity now or if it's a value trap, a potential value trap, and you should stay away from it. I will try to be the most objective and truthful in this analysis. It will be a fast analysis to focus on the facts, on the problems that the company may have, and also the opportunity that they have. So most of the hype that we have now, which is not seen in the stock market, but mostly on YouTube, on social media, on internet, is because the company have grown their revenue by 122% year over the year on data center, okay? Like the data center segment really grew a lot in just 1 year because it's the hype of the moment. Everybody is investing in data center. NVIDIA got extremely strong thanks to AI data center. And also it's a big operating margin business because the operating margin in it went from 19% to 29%. And another one, client segment revenue, same, the margin got higher, 10 to 15%. So for now, a lot of people think that the stock is too cheap because when we look at this, we see a high growth, here 29%, here 122%, better margins, so probably a future growth, which will be very, very interesting. So let's have a look at the numbers, okay? Let's have a look at the market, the numbers. Here is on Interactive Broker, the earnings per share forecast by the analyst, and we can see steady growth for the next 3 years, okay? For the next 5 years, they expect approximately 33% growth, okay? And for the next 3 years, they expect approximately 39% growth. Now, when it comes to numbers, the good thing with these companies, they have no debt. And for most of semiconductors, they have very low debt, debt to EBITDA negative, debt to equity 0%, 10%, interest coverage very high. So no problem about debt for bankruptcy here. The problem I have is more with growth, efficiency, and capital allocation. Okay, we'll see a bit more. The score here is 52%, so it's really bad. Okay, it's not that bad, but it's not really good. We can see that the revenue growth, okay, it's 7% here. In the last 5 years, around 27%. In the last 10 years, 16% per year, and it's expected to grow for 20% for the next 3 to 5 years. EPS, we had a huge EPS growth now. So we don't have 10 years because if we go to the financial of the company, go to the EPS, it was negative a few years ago. It started to be positive only in 2018. Since we had big up and then now it's a big down. And it's funny because if we compare this to the price of the stock price, we'll put this on the same scale. It perfectly follows the EPS. So people will have in mind that, okay, now we have good growth, we have data centers, so the EPS will continue to grow and we'll have a new rise. The thing is, I'm not sure this will happen for multiple reasons that we'll develop now. But this is the theory. So first, EPS that are like up, down, it went up, now down, now it starts to get up again. When it comes to free cash flow, it's kind of the same, okay? If we check at the free cash flow, in 2019, it became positive. We had a huge spike for 2021-22. Then it decreased, and then we're expecting another spike. So people are expecting that this will come back. So the price will go back to all-time high, okay? So there is prospect growth for the free cash flow of 100% for the next year. Like it expects to double, okay, because it's pretty low now, okay. If you look at it, it's pretty low. So it expects to double, to be same than in 2021. But does it mean that it's a good buy for the stock? I'm not sure about it, because here the predictability of the stock is only 1 out of 5, which is not really good. When it comes to efficiency, we can see operating margin, last 10 years around 2%, last 5 years 9%, now it's 6%. Return on invested capital, same. It decreased, not very good. Return on asset, not really good. Allocation, they're diluting the shareholders. Like you have more and more share. The average during the last 5 years was 8.1% dilution. You have capex, which is not that big. It's fine. Okay, it's good. And stock-based compensation, like compared to the free cash flow we have now, yeah, it's pretty high. It should decrease, but for now it's pretty high. The thing I don't like is, look, we're going to check the operating margin. Okay, operating margins. It went up to 22%. Now it went down, it's around 5%. We take NVIDIA, okay? Let's check the margin of NVIDIA. Operating margin to NVIDIA. The worst one they had was 16% 10 years ago. Since then, they never had something under 10%, under 20%, never. Okay, we can do the same probably with Broadcom. Let's check. Broadcom. Okay, margins, operating margins, same. Nothing under 14%. While for advanced micro device, we had 5%, 1%, like right now, not 10 years ago, right now. Okay? Second thing, which I don't really like about this company, as a long-term investor, again, I'm a long-term investor. I don't try to get something for the next 1 year or 2. I want something to keep for the next 10 years without having any doubt that it will be good. Okay, return on invested capital. Same, negative here. Now it's around 4%, 2.9%. So yeah, it expects to be better in the future, but you see, it's not really steady. It's not really nice. Here, we'll do it for NVIDIA. Return on invested capital for NVIDIA. Oh, let's take out the operating margin. Never been under 24.8, so 25%. Never been under 25%. For Broadcom, let's do the same, okay? Let's do the same, capital efficiency, return on invested capital. Here it's a bit less good. For Broadcom it's a bit less good, but never been under 6%, never. So those two always been better than advanced micro device. They have way more stability. It's not very good, like it's semiconductor, so don't expect too much from this market. But here, this is the main problem that I have. Okay, now let's talk about valuation, okay? So the company scores, the company outlooks on the number is not really good because it's not stable, growing calmly. I would prefer it to grow 8-10% per year, but very calmly and very predictably than having this, okay? When it comes to the company, let's talk also about the moat. They don't have a wide moat. You check at the Morningstar notation. It's a narrow moat. So it's good. It's better than 0, but it's good. If we compare to NVIDIA, they have a large moat. Okay, we can compare to Broadcom, AVGO. They have a wide moat. So 2 of the main competitors have a wide moat. NVIDIA is way more of a competitor. NVIDIA have better margin, better moat, better everything. Okay, better growth, better everything. Let's talk about the valuation. So now AMD, okay, we go an overview. It's a PE of 105, but the expected, like the forward PE is 27. Okay, we check with NVIDIA overview, forward PE 34. Okay, Broadcom forward PE 36. Okay, so they have a forward PE which is lower than them, so we can expect maybe some growth, or the decline of the other. If we take a look at this, so if we put a forward PE of 30 for the future, they are 26, they will grow, they will catch back NVIDIA and Broadcom. If you want to do 13% per year, okay, with the price now, the share price now is 121. If you want to do 13% per year, you need to buy the share at $123 if you think you will have 52% growth for the free cash flow for the next 5 years. So per year, it's not 52% in 5 years, it's 52% per year. Remember, the analyst EPS for the next 3 years is 39%, for the next 5 years, 35%. So it's easy here. If you think the free cash flow are able to grow 52% per year for the next 5 years, it can be interesting to buy. If you don't think it can happen, in my opinion, it's not an interesting buy for now. Now, if we put what analysts expect for the next 3 years, 39%, but let's put it for the next 5 years. If we have a PE ratio of 30, you have a cumulated annual growth rate of 3.66%, which is not really great. Like, it's not what we expect from a stock. It's not what we want. It's not really good. Okay. And now we can play here. Let's say they don't have 30 but 35. Okay. Here you do 7%. Okay. I think 30 is kind of fair for these companies, especially when we see how the numbers have been moving, how the numbers and especially the efficiency have been doing. I think here it's fair. Now 39%. Nowadays the data center market is dominated by a Magnificent Seven because they do huge spending on it. Okay, Meta platforms, Google, Amazon, Apple way less, Microsoft, they do huge spending in those markets. Okay, Oracle, all those companies, they do huge spending in it, they do huge expansion. But do you think they will continue this kind of spending during the next 5-10 years? Do you think it will be the same rate? I don't know. I think at a point it will decrease. I think we're way too optimistic on the spending that those few clients will have over the next few years about data center. Yes, data center is a big thing. Yes, data center is something important for the future. But do you really think they will continue spending the same way for the next 5 to 10 years? I feel that today we're a bit over anticipating the spending. We're overestimating how much they will spend and the growth that they will have. So for all of these reasons, for me, there is no way I'm touching AMD, even at this price. Yes, for pure value investor who want to do a bet or something like this, maybe it can be interesting. But the question I always ask myself before investing, will I be confident and comfortable owning this stock and never be able to touch it for the next 10 years? Will I be able to buy it, close my interactive broker, close everything, never log in again and logging only in 10 years? Will I be confident and comfortable owning this stock when we see the way everything moves? Like, I'm sorry, this is not really something you want to see on return on invested capital. Like, why suddenly they were good in 2020 and 2021, and suddenly in 2022, 2023, and so on, they were not good, while NVIDIA could manage. Okay? While NVIDIA could manage during this time. Okay, why? Because they decrease also, but not that much. Will you be comfortable owning a stock that will have all of this? Like, this is things that you need to take into consideration. Personally, I will not be comfortable owning this stock for the next 10 years. So the forecast is easy. Is either you think the stock can rebound and you take a 1 or 2 years opportunity on it, and maybe you will take something, but you need to be able to buy and sell on the good time. Or second option, you think the stock will do great for the next 10 years. Like, you're very good in this kind of business. You're very good to analyze semiconductor. And you feel that the narrow moat from Morningstar is not the good one. It's not the good grade. They should be wide moat. So you think this. Then you think they're able to grow at least 50% per year for the next 5 years to have a good value and a good return. And they will be able to come back to where they were a few years ago, and maybe to come back to the all-time high, and maybe continue to grow and be bigger. If you think all of this, if you think the big clients will not decrease their spending in semiconductor, in GPU, in AI and so on, then maybe you have an opportunity. Personally, I don't think there is an opportunity. I think the market is overestimating AMD, it's overestimating this, and it's too risky, okay? I want to beat the market on long run, and I don't think with a stock like AMD, I can beat the market on long run. I don't think with this capital efficiency and with this little numbers that are all the time same, like it's always changing. I don't like this. I don't like this. The numbers for me are not very good. I prefer consistent business that continue to grow, maybe less fast, but they continue to grow on the long term, and I can keep for 10 years. So let me know in the comment section, what do you think about AMD? Do you own it? Do you think it's a good opportunity? Or you're more like me, thinking that can be a good bet for 1 or 2 years, but it's not something that you will keep for the next 10 years, so you don't invest on it, and you prefer to pass, to go on other companies that present better opportunity. So let me know all of this in the comment section. Bye bye.